All right. Welcome to Pickles Picks for tonight. I'm going to try out doing it by video at 2:14 a.m. Eastern Standard Time. All right. So we fell back a little bit below. That's not showing up, is it? Hold on. I got to fix Epic Pen. This is going to be fun because I'm not good at recording shit. There we go. All right. So we fell back a little bit below last night's close after rejecting on the prior week close. So this is last week's close or last Friday. Up here at that green line right there. We rejected off of that, double tested it, pulled back to trend, which we kind of talked about in the closing bell video. And right now we're just chopping along the trend to the downside. We have slipped it a couple times in the overnight. One of those testing 68.43 with not much of a bounce on it. So caught in this 68.67 to 68.43 range to the up and down side. Slip of 43 confirms the rejection. So you got to confirm here, but it's not really bearish just yet. Down here at 68.12. That's where things start to break down. And that's a rejection confirm. That opens the downside for a new test at new lows. So if you extend that trend line out, much lower lows, potentially. To the upside, which is currently more likely, first place we'd be looking is the prior high, which is just a little under 69.17. And then beyond that, we'd actually be looking out up here at the failure point at 69.63. So I would say that the bull confirm, it's probably up here at 69.17. That's where you can bank on there being an actual breakout to the upside. Overnight SPX is 68.57. And momentum, kind of shitty. We got a breakout to the upside, but we didn't get like a much greater than like a 2x standard deviation move, or 2 sigma standard deviation move away from the expected. And so we slipped back below that in the overnight. This could continue to fail back to the downside. So this is actually a little bit of a weak setup, at least according to this indicator that I made. Some other things that we want to probably look at overnight. We probably want to, I just moved a bunch of shit all over the place, didn't I? Okay, we want that back up there where it belongs. We want that back down there. Okay. Probably want to take a look at commodities. Gold up a little bit overnight, silver flattish, copper down. Oil continued to move up in the overnight session, up 3%, which is fairly significant. Obviously, oil volatility up, market volatility up, and so we're seeing VX bid up about 164 basis points in the overnight session. That can quickly mean revert, but the rising dollar is probably also a little bit bearish here. Some of that will act as a stabilizing effect on NASDAQ because of the multinationals, but that's about it. The rest of the currency stuff, not too much, mostly euro and the pound. BTC showing not really a lot of price action there, holding at the 72,000 level. And yields across the curve sliding up a little bit higher once again. I don't think there's much else to look at here overnight, so we'll flip over to Gamma Strike. Let me pull that up. So we'll start off with the SPX0 DTE. We did note that we are at 68.58. I'll try to write 68.58 currently in the overnight session. Putting spot back down here. Big support at 50. Big resistance at 75. Obviously, to the upside of 75, you get a breakout towards 6,900. Above 6,900, things get choppy. So this is about $25 of range. Might even need to get above 68.80 to really break out. So that could be a strong resistance. If spot slips the 50 level overnight, there's not a lot of support to the downside. Varying degrees of support at 40, 30, and then down here at 6,800, but they're all pretty minor, and gamma really falls off kind of down to like 67.75 down here for a full breakdown. So possibly a little chop on a downside move to about 6,800, but slipping 6,800 is a pretty quick $25 move to the downside from there. But do keep in mind that this range could be a little bit more broken up. And then, we'll kind of mesh that against this, where we actually have almost no downside resistance. It's a very smooth drop to the downside, hard resistance at 6,900. Upside breakout from 6,900 runs into almost immediate resistance at 10 and then at 20 and 25, with the real bullish breakout to 6,950 only being on a breakout of 25. So the upside's rough. Definitely not the path of least resistance. The downside, on the other hand, maybe a tiny bit of support around 68.25, but not even much there. If price really gets moving, it's going to pick up quite a lot of momentum, and the move down to like 6,800 is pretty simple. We do know on the 0 DTE, gamma's not very high on this strike, but is quite high on 75, which means that a slip of 6,800 is still almost an immediate move down to 75. So big targets to the downside: 75, 6,800, with minor support here. Let's take a look at delta and see what all that gamma is acting against. We'll look at delta over the next 2 days into the Friday expiration. Just a little bit below spot here at 50. There's some support, and then some at 6,800. The upside for delta, though, is kind of thin until you get out to about 69.10. 69.10 is the nearest significant resistance for delta. So gamma in this range is a little bit rough for price action, but there's not a lot of delta. So the effect of that upside gamma is a bit reduced. 50 is kind of the flip point, 6,800's the downside target. So that's pretty simple. For charm, we'll look at the 0 day. Knowing that we moved down here, charm's starting to favor bears, but we'd really want to like slip below this for bears to get like a big edge from charm. You really want those weights to shift up. Although I will say, charm is a little bit more bearish today than it was yesterday. And if we start to move into the end of day below 68.50, it's probably going to benefit bears more. Now, if 67.75 is lost, that's really bad. That could drive a much larger move into end of day, or like the last hour of the day. Lastly, out here on the gamma curve, we see that it's flattened out a bit. The overnight drop of bringing us from about negative 3.85 billion to about 10.3 billion. So like 6 and change. Gamma falling off. Gamma's not going to fall off quickly, and so I think moves away from 68.50 are going to be kind of tough. Gamma doesn't drop really fast. There'll have to be some sort of uptick in vol or some sort of catalyst to kind of steepen this a little bit, because right now this flattening out isn't really good for the up or the downside, and kind of might narrow our potential range tomorrow, at least more than it was yesterday. For dealer positioning, take a look at SPXW here. We got an uptick in options bought, but delta largely fell off, so probably shedding some put delta there. On the bounce, or the continuation from yesterday's low, gamma moved up, but still not quite positive. So gamma mean reverted, but also not a lot of change in skew adjusted gamma. So take a look at SPX. SPX slid. Oh, actually, before I go to that, I want to look at the neutrals. So we got Gamma Max continuing to move up, Vega neutral pulling down, which might be indicative of some short dated put selling. DNGN also pulling down, slightly bullish, but Gamma Max moving up isn't really. People are probably still selling those far out of the money options. Back here on SPX, still closing below gamma neutral on the monthly chain. There was a bit of an uptick in bot options, a bit of an uptick in gamma. Both of those, that remained steeply negative. And gamma on the SPX chain hasn't been, or skew adjusted gamma hasn't been positive since like December 11th. So it's been quite a while. Mostly what we see here is this, not picking up delta really over the last, since the December OPEX expiration. Delta's been pretty flat, OPEX by OPEX. And then Gamma Max pulled back and VN pulled back a little bit, but not very much. This is all a little bit more bullish, which you expect to see after a green day. Gamma by expiry. Oh, hold on. Shift over to SPXW. Gamma by expiry. Still negative over the next couple of days, but some bullish positioning moving out into next week. And the amount of negative gamma on each day here is kind of declining. I think we were at like 4 billion yesterday, so that's dropped off a bit. Still negative though, and still opens us up to wider ranges. But maybe not quite as volatile with the negative gamma thinning out a bit. Obviously, that's subject to the overnight move. We did pick up a bunch of negative gamma exposure with the downside overnight. If that steepens, like if we fall below 68.50, there'll be even more negative gamma on tomorrow's expiry. Delta's still negative, like all the way out into like late March. For options macro, we see a big uptick in put leverage in the money, or out of the money. In the money, put leverage fell sharply. So this is bullish. And call leverage at the money and out of the money rose. So bulls buying calls below spot and out above spot. Put sellers jumping in to the downside, and put put owners taking profits on the bounce. So a little bit of collapse in the gamma, like in the bearish positioning for puts. And we see a slight uptick in call leverage, put leverage down. So these moves in leverage not huge though. Puts lost a bit of delta, but not a ton. Calls picked up a bit of delta, mostly to the upside. And puts in the money is where the most delta looks like it was lost. So they're also indicative of long puts closing. And puts did get a little bit cheaper, but not much. And calls got a lot more expensive. Those kind of bounce back to like the 3.2 levels. Puts a little bit below 3.2 levels. So a little bit of repricing there. Obviously, that favors the bulls somewhat, but it also disincentivizes additional call buying. Check out the volatility page here. Sorry. What's up? Yes. So we got the 10 and the 30. So the front bucket IV pulling back, but holding that backwardation, and that backwardation spread still a bit wider. So there's less panic than there was into close yesterday, but there's still there's still, quite a bit of risk priced into the front over the 30-day. And then, skews were pretty flat here. So we got skew 10 and skew 30 with pretty flat pricing. So the tails are still expensive. They're still bid up. People aren't relaxing off of those put positions too much, which is why we didn't see puts price down a lot over on the options macro page. So we got a bounce with slightly smaller range than yesterday's move up. And the surface did what you would expect it to do, which is kind of like 10 and 30 both pulled back. But the downside hedging demand is still present. And this is kind of this is kind of the extent of the mean reversion. So realized still isn't exploding upward, but we do have a move up in HV10 because of the upside move today. So we did narrow some of that volatility return premium. I think it looks like the 10 days at 6.92 and the 30 days at 3.85. So those both compressed. There's a little bit less tax baked in. And so that uptick in premium because of panic is closed a little, but it's still not back to where it was just like 3 days ago. And it's still positive, like still a lot of positive premium there to harvest for vol sellers, but still very risky because puts aren't getting cheaper. So they're selling the vol, but it's not causing puts to price down. People are still buying up the cheaper puts as they drive the price of them down. So the demand is, when you get skew flat like this but very low, it's just telling you that demand is persistent. And on the 30-day, it's been unchanged for like 3 days in a row. The 10 days got a little bit more variance, but not much. So I would say like the 68.86 level above yesterday's high, that's where we'd start to see IV bleed, and you'd start to see that backwardation close between the 10 and the 30. And we're going to see a lot more vol selling if we get above that level. Yesterday's low at 68.12, that's probably going to be the first trigger where we start to see IV10 start to move back up sharply. People start buying the near dated puts. And then if we get below 67.10, that's where we're likely to see the IV or the skew 10 dive. And that's really when shit breaks down and you get downside continuation. So far we haven't hit that. To shake off this whole regime of uncertainty, I still think we need to get out above like 6,900, which we're just not there yet. There's a lot of event vol baked in for tomorrow. I think on the data side, we're past services, we're past the beige book. I'm not really sure what we have tomorrow. I know we have Challenger. I think we have import-export prices. And then non-farm productivity. Non-farm productivity could be a big surprise. That's coming in the pre-market. I think the consensus estimate is 1.9%, but it's forecasted at 4%, the prior print at 4.9%. So that could be potentially a very big drop in productivity, which is obviously, bad for the narrative that AI is driving productivity right now, and just bad for the economy overall. Import-export prices are expected to fall, but if import prices rise substantially, import prices are expected to rise a little, but if they rise even more than expected, or export prices fall more than expected, that can be a knock-on effect to GDP, but it can also, be inflationary. So if we see import prices rise more than the 0.5% year over year that's expected, we may get some repricing in bonds that could drive some more equity selling. as bond yields move up. Non-farm payrolls, though, not non-farm productivity, non-farm payrolls is still out on Friday. Friday is still our big day today. So some of this event vol could bleed off in the intraday if none of the data is surprising and there's no shocks from Iran and all the geopolitical stuff. Then there'll be some vol for bulls to sell, but they'll probably not want to sell it till we get out above like 68.75, 68.80, where we have that little upside resistance. If they get to the upside of that, that'll act as support, and they could try to push out higher, maybe like 6900, 6910. Implied move for tomorrow is 1.55 on the SPXW, 0.93 on SPX, giving us like a net of was that like 1.24 ish. Hop over to the other chart there. Try to plug quick. A little bit wider range than what was expected yesterday. It's like about 67.84 to the downside or 69.50 to the upside. I think calls are likely overpriced given all the upside resistance between 6,900 and 6,925. So there could be some good call selling opportunity out above, well, substantially above gamma neutral there. We know the neutrals moved down a little bit. You can just ignore these for now. I'm not going to update them. And then our actual range for the day, I would say probably pretty flat or pinned to like 69.50, barring any like shocks. So maybe like something like that, a little bit to the downside. But barring any shocks, I think we could have a pretty flat day and see that bump in realized vol from yesterday crush out. If we do get a substantial move, remember, RV is going to move up. That's going to make option selling less desirable. If we get a move out to the upside, it'll make call selling less desirable. If we get a move to the downside, it'll make put selling less desirable. There's, I think, I don't really think we left behind any gaps here. I know we filled yesterday's gap today at market open. So that's probably about where we're at for tomorrow. Obviously, data will have some impact, and the overnight sell-off in news can have some impact. 68.25, 6,800, and then 67.75 to the downside. All key levels, potential supports. To the upside, big resistance 75.80, then 6,900, and then 69.25. Above 69.25, you get a pretty straight move out to 69.50. But getting through 6,900 to 25 is quite difficult in this range, especially because VN's down here. VN's been moving down. A lot of people have been asking about this, talking about this. Part of the reason VN's moving so close to spot in a range where we generally don't see it is that longer dated positioning on the SPX has been pulling back. And there's just less overall vega on the chain. In addition to that, the market, that means the market maker is convexity is to the downside of that level. So if we get out above VN on the SPX and market makers have to go long vega, it kind of changes how their risk profile works. And usually, and their hedging mechanics, usually in order to stay above vega neutral and not have price just consistently snap back to it like we saw yesterday, you actually need a lot of supportive gamma. And since we don't have a lot of supportive gamma, gamma's negative above VN. It's very, very hard for bulls to push through that. If they do manage to get positive gamma, positive vega, then you can get a trend that kind of will just run until it hits resistance, so that you get some profit taking. You'll mean revert you'll mean revert back to Vega neutral. But and that's because above Vega neutral, the market maker will buy in order to hedge, and they'll help push price up. So you get bought, like the market maker buys the uptick, very much like a negative gamma, like they would in a negative gamma environment that causes squeezes to the upside, but you move up at a much slower pace because gamma turns more positive. But then if price fails, even in that positive gamma environment, because you'll be more negative or positive Vega than you are positive gamma, then the market maker is very unlikely to buy the dip on any downtick. They're not going to sell the downtick, so it won't move down as fast back towards VN, but they won't buy the downtick. So it will just keep moving down until it gets to VN, and then people can reposition. So VN's a really cool mean reversion target, provided there's enough time in the day, but over time. Very, very fun mean reversion target to play, especially if you get out really far above it, or yeah, that's pretty much it. Anyway, thank you guys for watching, and I'll see you at Market Open later.